For working parents, paying for daycare can present a large financial burden, but the IRS offers a credit for paying child independent care expenses to offset some of that burden. This video describes the child and dependent care credit as it is for all years except for 2021. If you are preparing a 2021 return, the credit is calculated differently. The credit can be as much as $1,050 if you have one qualifying child or $2,100 if you have two or more qualifying children. The credit is non-refundable, which means you have to have some tax liability to take advantage of it. You are eligible for the credit. If you have qualifying child care expenses, these expenses can be for any child under 13 years of age or a spouse or any other dependent that is physically or mentally unable to care for themselves. The expenses can be for daycare, preschool, after-school programs, household helps such as a babysitter or nanny or day camp, K-12 schooling. Expenses do not qualifying for the credit. Up to $3,000 in expenses may be used to claim the credit if you have one qualifying child, and $6,000 if you have two or more qualifying children. If you have two or more children, then the expenses do not have to be split between them evenly for the expenses to be eligible, as long as no more than the maximum expenses allowed for two children is exceeded. Here is a quick example. Nadine and Dwayne both work full-time and have two children. Donna, who is 10 years old, and Maddie, who is 2 years old. Maddie is in daycare with annual expenses of $4,500, but Donna only attends an after-school program which costs $600 per year. Since their total expenses do not exceed the $6,000 allowed for two children, the entire $5,100 they paid is eligible for the credit. Even though one child has expenses that exceed the amount that will normally be eligible if there are only one qualifying child, even if Nadine and Dwayne had no expenses for Donna, all of Maddie's expenses would still be eligible for the credit because Donna is still a qualifying child for the credit. If Donna were 14 and therefore no longer qualifies, their eligible expenses would be limited to $3,000. Since now they would have only one qualifying child, both parents must either be employed or full-time students, and eligible expenses are limited to both parents' earned income, such as wage or self-employment income. Parents that are full-time students are treated as having $250 per month in earned income with one qualifying child and $500 per month with two or more qualifying children. If one parent works outside the home and the other one doesn't, the couple doesn't qualify for the credit. And as with the most credit, the child and dependent care credit is not available to married couples filing separately. The percentage of expenses that may be claimed for the credit vary according to your adjusted gross income. If your adjusted gross income is less than $15,000, 35% of the eligible expenses may be claimed as the credit. If your adjusted gross income is between $15,000 and $43,000, the percentage gradually reduces in steps from 35 to 20%, and for adjusted gross incomes over $43,000, you can claim 20% of the eligible expenses as the credit. These adjusted gross income figures are the same for all filing status. The child independent care credit is reported on Form 2441, which is shown here. Let's go ahead and fill out Nadine and Dwayne's Form 2441. In Part 1 of the form, Nadine and Dwayne list the child care providers that they used and the amount they paid each provider. You must provide either a social security number or employer identification number for each provider for the expenses to be eligible for the credit. Both child care providers provided letters containing this information, and the amounts paid. Part 2 of the form computes the credit. Line 2 lists the two children for whom expenses were incurred, and line 3 adds the expenses together. If the expenses exceed the maximum allowed for the credit, the maximum amount is placed here on lines 4 and 5. The earned income for each spouse is listed here. We put Nadine's wage of $26,500 and Dwayne's wages of $37,300 since their total expenses did not exceed either spouse's earned income. All of their expenses are eligible for the credit. On line 7, the couple's adjusted gross income is entered. This is not necessarily the couple's combined wage income, although it can be in this case. It is since Nadine and Dwayne have no other income or adjustments to their incomes. Since the couple's adjusted gross income is more than $43,000, they can claim 20% of their eligible expenses as a credit, giving them a tentative credit of $1,020. Since the credit is less than Nadine and Dwayne's tax liability, $1,020 is their final credit. This credit amount is entered on line 2 of Schedule 3, and that amount, along with any other non-refundable credits they might have, is entered on line 20 of Nadine and Dwayne's 1040. Since a child independent care credit is not refundable and the child tax credit is partially refundable, the non-refundable portion of the child tax credit must be adjusted by the amount of child independent care credit to assure the maximum benefit from both credits. This calculation is shown on this child tax credit limit worksheet, which is prepared along with Schedule 8812 credit for qualifying children and other dependents. The amount from this worksheet, or the actual child tax credit, whichever is lower, is ended on line 19 of the 1040. Since the Stones have 2 children under 17, their actual child tax credit is $4,000. So the amount from the worksheet is lower. If either Nadine or Dune had received dependent care benefits through their employers, they would have to complete Part 3 of the form. These benefits are shown in box 10 on a W-2 form. Any of these employer-paid expenses would have to be subtracted from any childcare expenses paid to arrive at eligible expenses for the credit. If for some reason the amount of employer-paid dependent care benefits exceeds the amounts actually spent on childcare, the exceeds amount is then considered taxable income and entered on line 1E of Form 1040, and that's the oversimplified version of the child independent care credit.